Holy flippity flip flop flap and smokes, everyone. Boy, do I have an emergency live stream for you today. We've got huge news that is happening in the markets, but more specifically, what is happening with the banks. And people, with what's happening in the bond market right now, I think we could see more bank failures, and this time not just by small banks, but by major banks. And we've got a new earnings release that shows what's happening with the banks and what's happening with their balance sheets. And people, this may shock you. So just to make sure everything's going well, you can hear me fine, the video is fine, type 1, and we're going to get into this very, very important video that may even get deleted. So first things first, everyone, look at this. This is massive. Bank of America unrealized losses on securities rose. So we all know it's been bad, but it is getting worse. Unlike the mainstream media is telling you, the banking crisis behind the scenes, the plumbing in the financial system is beginning to crack, and soon it's about to burst. The mainstream media has been very, very quiet on this. You know why? Because they don't want to cause panic. And me, I don't want to cause panic too. I just don't want people to lose everything, okay? Remember, I'll go ahead and bring it up here, but while I talk about it, there is $18 trillion of commercial bank deposits, which I'm just going to bring up the chart here. And guess how much there is for the FDIC? There's only about 1.5%. So I'll go ahead and bring this up. I'll move myself here and adjust this chart so you can see and exactly what's happening. So it peaked in April 2022 of around 18 trillion, and we can see ever since then bank deposits have been dwindling. Okay, so this is very, very important. At the same time, when the US government is funding so much wars, which we'll get into in a moment, they're not going to have the money to bail out the banking system this time. So let's dive a bit deeper into this report here by Bank of America. We just got their latest earnings results, and that's why we have access to this information. So unrealized losses have come under closer scrutiny by investors since March. At the time, Silicon Valley Bank sold a portion of its holdings at a sharp loss, participating in its collapse and fueling the worst industry turmoil since the 2008 financial crisis. Now also, that's not all. All of these unrealized losses are in government guaranteed securities, the Bank of America chief financial officer said. Because we're holding them to maturity, we will anticipate, and that's right, anticipate that we'll have zero losses over time. Thanks for that super chat, Frank. Appreciate it. Now, this is what a lot of other banks did, like Silicon Valley Bank. They said, well, look, we'll just put it on this, you know, it's creative accounting. That's what it is. We'll put it on this other balance sheet, and all of a sudden, you know, hundreds of billions of dollars lost, they just disappear. No, they don't disappear, everyone. And again, the reason why this may not happen, why they say we anticipate that we'll have zero losses, what happens if bond yields spike, and like what we've been seeing, a lot of big institutional clients pull their money out of Bank of America and go to put it in a money market fund? Well, guess what? Whether Bank of America likes it or not, they're going to be forced to sell these bonds at a huge loss. And if they don't have enough capital there, that's how the bank will collapse. I'm not saying 100% is going to happen, okay, but it is a risk. So Bank of America had reported early 106 billion in paper losses in the second quarter, but listen to this. The second biggest US lender had about 603 billion in held to maturity securities. It said in the filing Tuesday, shrinking from 614 billion in the second quarter, but that is still massive, 600 billion. And you better believe there's much more banks in the same situation. Now, what happened in the markets today? We saw red across the board. Okay, the Dow was down around 1%, over 300 points. The Nasdaq, a lot of the speculative tech stocks, which have been booming lately, which could lead to a broader stock market crash because of this. Look at this. The 10-year Treasury yield breaks above 4.9% for the first time since 2007. And I don't know if you remember, everyone, but what happened after 2007? Did something good happen, or did something bad happen? Well, I don't know about you, but I'm getting a lot of deja vu of what led up to the 2008 financial crisis, okay? And what's even worse is there's so much more debt in the system. go ahead and move myself here. This is a chart of cumulative growth rate in a debt of US government versus GDP. This red line here is a debt, and see all these other lines here all the way down at the bottom? That is tax revenue and GDP. Now, we can see in the 80s it was pretty similar. Thanks for that super chat, Yimi. Appreciate it. So we can see here it was pretty close in the 80s, but ever since 2000, the debt took off and skyrocketed, and GDP and tax revenue hasn't been keeping up. And people, this is not sustainable. And this is why, unlike other financial crises where the US government could bail all the banks out, they're going to be broke. They're not going to have money. All their money is going to go to fund the next conflicts that's going to be coming ahead. Now, also a big black swan that could cause the markets to crash is oil. Look at this. Oil is continuing to rally. And if we get $100 crude, well, guess what? That's going to be pretty much game over for the Federal Reserve. They're not going to be able to stop inflation. And maybe, I'll tell you a little while in a moment, maybe they don't want to stop inflation. Now, what's also a big problem for the banks is not just US Treasuries, but also mortgage-backed securities. Nobody's talking about this. A lot of these mortgage-backed securities that have interest rates of 3%, they're crashing. Nobody wants to buy this. Why would you want to buy a mortgage-backed security that's paying 3% when this just happened today? Officially, not just for people with bad credit, but the national average 30-year fixed-rate mortgage, look at this, hit 8% for the first time. Again, I'll go ahead and adjust this here so you can see it. Again, the same time since 2000. So we now have higher mortgage rates than what we had in 2008. Okay. Now the housing market on average hasn't crashed yet. But again, what the media is getting wrong is the US housing market, same with Australia, it's not just one market. While the average is still close to all-time highs, there has been areas like the Bay Area and California which have tanked 20 to 30%. Okay. But it's simply just a matter of time before we see a housing market crash as well, which will bring the real economy down. And what I've been warning about, what's really going to ignite this crash is when the official unemployment rate ticks up. And you may think, well, because what's been happening lately, nobody's selling their house because they've got a mortgage of 3%. And that's right. But if we see the unemployment rate tick up, they may have no choice to sell. Or if we continue to see the cost of living go up, people may have no choice to sell if property taxes keep going up. In Australia, they call it council rates. If insurance costs keep going up, people may say, look, I've got a bit of equity in my home. I may sell it to try to pay off some debt and keep up with this crazy cost of living. Because mortgage rates going from 3% to 8% and house prices staying at all-time highs, that doesn't add up, people, and that is unsustainable, and we will see a big housing market correction. Now, also what could be another black swan event that could kick off this downturn was this. So, OPEC, Iran urges Israel oil embargo. Okay, so now there's a lot of drums being beat in the Middle East, and Iran wants to put an oil embargo on Israel and across Middle Eastern allies. Western allies of Israel. So OPEC is not planning to hold an extraordinary meeting or take immediate action after Iran's foreign minister called on members of the Organization of Islamic Cooperation, OIC, to impose an oil embargo and other sanctions on Israel, four sources from the producer group told Reuters. But this may happen in the future. It's just a risk we have to pay attention to. Okay, because look what happened in 1973. So Arab producers led by Saudi Arabia slapped an oil embargo on Western supporters of Israel in its war with Egypt, targeting Canada, Japan, the Netherlands, Britain, and the United States. So while this is unlikely, it could possibly happen again. Maybe Saudi Arabia won't join this time, but some other Middle Eastern countries may join as well. And we all know what happened to oil in the 1970s. They spiked as a result but over the long term, the crisis led to development of new oil provinces outside the Middle East. And this is completely crazy what the US is doing. The US has so much oil that they could be drilling, but they're not drilling. And this is making oil prices go up, which is absolutely crazy. The US was energy independent. They were self-sufficient. But this Biden administration, wow, there's not making anything any easier. Because look at this. Biden admin to draft $100 billion for Ukraine and Israel foreign aid package. So again, this is absolutely crazy. And this is something I've been thinking about. The US is the biggest and most powerful economy in the world, but they can't even afford free healthcare for their citizens. A lot of US citizens go bankrupt once they have some big medical bill that comes up, but they can afford to send. It's going to add up. It's going to end up, when this is all over, it's going to end up in the trillions for this Ukraine conflict and this Israeli conflict. And we're not even talking about if something pops off between China and Taiwan, which I think they're just biding their time, waiting for the US and their allies to have their oil depleted, which we got a report that barrels shrunk by about $4 million barrels shrunk in the US oil reserves, much more than expected, of around 300,000. And this is going to lead them very, very vulnerable, okay? Because also look at this. Not only are they funding Israel, but Biden to seek $100 million humanitarian relief in Gaza and the West Bank. So US is going to be funding both sides, it looks like. Now, maybe, you may say, well, look, they deserve that, they need that. Yes, it is a huge humanitarian crisis in Gaza and the West. But the thing is, the US government is going bankrupt. And this is what led to the British Empire imploding, was they tried to spread their resources so thin, okay, that a lot of their enemies saw this as a time of weakness and they had to withdraw from all these other military operations they had throughout the world. So I need you thinking, well, okay, what does all this mean in simple terms? For those just joining now, like I said, Bank of America, they're sitting on billions and billions of dollars in unrealized losses. Yields are still skyrocketing, not just on government bonds, but also on mortgage-backed securities. So all those banks that have those assets on their balance sheet, if we see a financial crisis and all these big institutions do a run on the bank like they did with Silicon Valley Bank, or just simply if yields keep on going up, people are going to take their deposits out of the bank because they're not paying them enough, and they're going to put it in a money market fund. And if Bank of America or other banks don't have the capital there to fund those withdrawals, we could see another banking crisis, everyone. And again, this could lead to a stock market and housing market crash as well. So you definitely want to start preparing right now. Have that emergency fund, pay off debt, get a side hustle, find a way to get a second job. There's no easy solution during these hard times. But, when hard times come, the hard people, the people keep on pushing through during those hard times, okay? So thanks for watching, everyone. You're awesome. I'll see you all in the next video.